Hi traders and welcome to the Friday Market Watch on the 13th of January. So we've already seen some good moves this week already, and it's pretty early on in the year, but we're starting to see some momentum shift in a few of the big currency pairs and some of the indices. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. So we'll start out here with the Aussie USD, and you can see we've seen some pretty good moves on it even this week. We're really getting close to that 70-cent mark, and yeah, that was our initial target. And realistically, the first one that we set late last year was around that 68, sort of 70 area, and it hit it several times on the way up, as you can see. And now it's finally broken up and then came back and retested it. That's the setup that we always love: a break of a resistance zone that comes back and retests it from below. And as you can see, once it did that, it reacted really strongly off this level, which is always a really good sign. And the best way to identify that, if you do miss the initial break, is to actually go back down to a smaller time frame. So if you go down to, say, even a 1 hour chart, sometimes you can get the movement off that, and it gives you a bit of an idea. You can see that we've got several touches. So if you missed the first one, you can sometimes get in on the second one if it does get back down there. But once it starts to move a little bit more heavily, I mean, this was obviously a little bit news related throughout the evening last night with the CPI data. You know, I guess the market liked what it heard, so that was good enough for it, and everything ran. But you can see that even if you do miss the initial burst, if you go to the smaller time frames, you do get a chance to actually get in on a few touches later on. But look, it's been pretty good, and realistically, it's got the 70-cent marks, you know, well and truly in its sight now. If it does touch the 70, we might as well mark it, I guess, because it's probably going to be the next point of call. If we do get a touch up there, you can see the resistance there. It's not only a round number, but it's also an important level from a psychological standpoint, and also a roll reversal zone. So if we get the close up there and we start to reverse a little bit and it looks for a little bit of a pullback, the logical target's going to be back down here at the 68.80 area, this blue line here. If we certainly need to see a lightning bolt on the way down for that to happen, though. Like, I wouldn't be touching that unless we get a solid change of trend. So a series of lower highs and lower lows on at least a 1 hour time frame, and that is the range that I would be playing. The 70-cent mark is going to be a relatively strong resistance point for it, though. What I would probably be looking for here is an opportunity to let it go up. If it's going to continue up and long, it's more than likely going to come and test the 70 from above anyway. So if it does get a close above the 70-cent mark and you get a smaller time frame, you can continue on. But the preferred trade would be to let it come back, very similar to what it did here. Let it come back, touch the 70-cent from above, and then look for an opportunity to get in on a smaller time frame lightning bolt. So they're generally the best opportunities and the best way to enter those. So lightning bolt on the way down, we start aiming for the 68.80, and a break of the 70-cent mark, we test it from above, and then we look for a change of trend down here to continue on with the long. Pretty good trading on the Aussie. All right, we'll move over to US dollar CAD now. You can see the last few weeks have been pretty ordinary, really. Very, very flat throughout the Christmas New Year period, as you can see. But now we've broken through that support zone, and it's starting to look a little bit ominous. It's in the middle of the two ranges that we've got set here. We had them set from last year. The logical target, if the market continues to strengthen and we see US dollar weakness, the logical target's going to be this level here, the 132.40 area. That's going to be the next point of call. You can see it's a roll reversal zone. We've got resistance and we've got support. That's the likely target for it. So, and it is looking pretty weak. So realistically, yeah, any small time frame change. So a pullback to a 20 moving average on the way down, say on an hour chart or a 15-minute chart, gives you an opportunity to scalp it down to that level. And if we can get that in, then basically that would be a target. But a change of trend from this level here. So again, it's a little bit of a support zone, but not much. I mean, probably clutching at straws really to say, you know, I see that in the middle of the channel. For me, the move up to the 20 moving average and the 50 moving average would require at the very least a 1 hour change of trend. So if we get a 1 hour change of trend and starts to get a lightning bolt, so a series of higher highs and higher lows, then we can start to target the 135 level as the level from above. But in my mind, it still looks pretty weak at the moment. So the preferred trade would be on the way down, because then we've got momentum on our side. But if it does indeed turn around from here and we see a change of trend, the 135 provides a really good target. Okay, we'll move over to the US dollar yen now. This one's really been, probably the darling of technical analysis for the last little bit. You can see the lightning bolts have been all the way down, behaving absolutely perfectly. Still held up its technical levels, even though it was through the holiday period. And now it's broken that absolute key level at 131. Like, all these lines were drawn last year, so you know we've been testing them even throughout here. Like, you can see, even in this little period here between Christmas and the New Year period, it just basically bounced between the two zones that we set for it, which is always good. But you can see the weakness is certainly setting in again. You can see the 20 moving average has held it at bay. You can see that we've got a bit of a rejection candle there, and now we've got that all-important break. So realistically, it's very, very, we have to zoom quite a bit out now to actually find the next level, which will be around the 126.80 area. So I'll pop a line there for us. That's realistically our next target. When something moves up in an ordinary fashion, quite often it comes down in a very ordinary fashion as well. As you can see, we've got lightning bolts all the way down, 20 moving average, holding it at bay every single time. We haven't even got a single break above it there. And yeah, realistically, the logical target now will be that 120, well, it's almost 127, so 126.80 to 127. So still a handful of pips away, but really what we're looking for is a continuation on the smaller time frame. So if we go say to a 4-hour chart, you're basically looking for a continuation, pull back up to the 20 moving average, or testing this level again. They're going to give you the opportunities to move it down. Okay, so basically looking for pullbacks to the 20. Now, if you do indeed get a change here, and we see a roll reversal again, and we see a line basically of lightning bolts going up on a 1-hour chart, I could easily see a case for it to aim back up to the 130.80 to 131. That's the target on the way up, but I would be looking at that as a scalp only. That's not a momentum trade in any way, shape or form, because obviously all the momentum and all of the heavy downtrend now, the prevailing trend is on the way down. So it's always better to trade in that direction. But if you are looking for a counter trend opportunity and you are just scalping, the 131 provides the best area, but I wouldn't be doing that unless I had a lightning bolt on at least a 1 hour, and that can give you an opportunity to get up there on that one. All right, quick look at the dollar index before we go on to the important euro. And look, this is looking in a very similar vein, very, very short. You can see that once it broke this level here, it was always going to be in trouble. You can see that consolidation zone through the holiday period quickly got sorted out once that candle broke through there. And it was looking very ominous, even with these two small indecision candles here, because it was just holding underneath. Normally what you'd see, if it was going to show any strength whatsoever, if we thought we had any movement whatsoever up, it would have been closing above the 20 moving average, but it's nowhere near that, as you can see. And again, this is the 101 really is the level here that it's probably going to be aiming for. You can see it's a roll reversal zone again, support and resistance. So in all likelihood, it's probably going to test that level if it continues to weaken us down, and then find support at that point. I'd be surprised if it broke that level without any sort of support at all. So that would be my initial target. But of course, the euro is the one we're going to be looking at to actually benefit from that. You can see it's been the darling of technical analysis as well, really. It was on the way down, and on the way up it's proving to be quite the show. You can see here we've gone, look, we've broken up above. We've hit all the targets that we set last year anyway, so it hit it there, and then we had the holiday period, and then of course it's hit it again, and this time it's moved on to the secondary target at the 108.20 level. Look, it could definitely potentially have more strength in it. It's one of those ones though where I would probably wait, just be aware of where the support is for the dollar index, because it is very important. When that hits that support, it's probably going to find the resistance on the euro. That's going to level out pretty quickly. The next real level is probably the 109.50. So, at the 109.50, that's where the next support and resistance zone is. I'll pop a line there for us. I'll get rid of the this previous line, so we don't need that anymore. I'll get rid of that. And yeah, realistically, now what we want to do is probably trade within that range. If the momentum continues, it's going to more than likely test the 109.50 without any serious resistance. There's nothing really there. You can see that. So as long as the dollar index does what it needs to do and continue to just short off a little bit more, you're going to find those two will coincide. And at that point, we'll have to reassess. So I think if we scalp it up until that point, short of that, a change of trend, a series of lower highs and lower lows on a 4-hour chart, and then I'd be looking for the shorting opportunities back down to the 106.80. Okay, so if it does start to turn around this point here, and we see the sequence of lower highs and lower lows in the smaller time frames, yeah, the next real target is the 106.80 on the euro. But it's been really good trading, so hopefully you're able to catch a bit of that. And now we'll go over to the all-important S&P, of course. Look, this one's hit all of the levels that we needed to. Same deal, really. Consolidation, found support where it needed to during the holiday period. Once it did break up and broke through the 50 moving average, it's testing the 200 now. Look, it's trying to get above 4,000, but really the level that we're really aiming for is the 4,100. So if we see the momentum continue, you can see the MACD now has started to shift into positive territory now that we're getting a little bit of movement and a little bit of a separation from the 12 and the 26. So the logical trade now is up to the 4,100. I don't think 4,000 is going to be a real big stumbling block for it, to be honest. I think that if we get a little bit more momentum and it gets past 4,000, the 4,100 should come relatively quickly. And it is very, very strong resistance there, as it was strong support right through. So the logical target for the upside, if we continue with smaller swings on the 1 hour and 4 hour time frames, look for opportunity to get up to the 4100. But if it does turn around from here and the 200 does its job, I mean, look, at the end of the day, we've got important data still coming out for the rest of the week. So it can change on a dime. If we start to see the weakness at around the 200, and if it fails to break the 4000 easily, which it's a possibility, the next real level is definitely going to be the 3880, where this blue line is here. It is very strong resistance and support there right through on, so it's a very good role reversal zone. So really it's in the middle of the two channels. You've got the top channel and the bottom channel at 3880 and 4100, trading between that, just following the momentum really. Whichever the momentum is on the smaller time frame is the direction that you will go, and aim for those two levels in the first instance. Treat it as a swing and a scalping trade, and it's going to be pretty good to you, I think, because realistically, once it breaks out of that zone in either direction, then we can start looking at some longer term opportunities. So it's been good trading already this week, but I think we're going to have a really, really good year of technical setups, and I think the momentum is going to start to shift. So we'll see where we're at early next week once all the news is out of the way again, and we'll see where the trends take us. Hopefully, we will get a break above one of these levels that we can talk about into next week. Thanks everyone for joining me. Have a great weekend. I look forward to seeing you all next week.